everybody, David Schuster here. Economists and investors are now warning that Donald Trump's plans taking shape will spark a catastrophe. Former Treasury Secretary Lawrence Summers says the Trump transition has been disturbing and that the chance of an economic meltdown early in Trump's next term is growing.
If he carries through on what he said during his campaign, there will be an inflation shock significantly greater than the one the country suffered in 2021.
In other words, skyrocketing prices, stock market volatility, and consumer panic.
He has promised, if you add it all up, more than $10 trillion in tax cuts relative to the current trajectory. He has called into question by politicizing the credibility of the Fed. He said that the dollar needs to go down, not up, raising the price of every imported good. And much more importantly, on the supply side, he's called for pushing up all kinds of prices by putting an across-the-board tariff on, which will raise the price not just of imported goods, but of American goods that use imported goods as an input.
And then there's the impact of deporting migrant workers. Carrying out the deportation would cost the government, through law enforcement or the military, tens of billions of dollars. And the removal of workers would cause a labor shortage, especially in the food industry, causing prices to go up sharply.
The idea that it is a highly inflationary program, that generates about as much consensus among people who follow economic things as any proposition I can remember in the 40 years I've been doing this.
And unity or agreement among economists is hard to find. Throughout Wall Street and among titans of industry who support Donald Trump, there is some hope that Trump will hear the concerns and scale back his plans. After all, Donald Trump's ego is the biggest when it comes to economic and financial matters, and there are multiple reports that the warnings being issued directly to Donald Trump and his transition team are intensifying.
There is some belief that business leaders and others will talk him out of it and say, look, you'll ruin the economy if you do these things. It will damage your presidency. That's possible. Maybe it will narrow. But at least right now, they're talking big. They're acting like they're going to go through it. And these are, again, the signature promises of his campaign. So maybe, yes, maybe he'll cut a deal. Maybe he'll make it smaller. Maybe he'll take the win and move on to something else. But maybe not. And there are a lot of people in this country right now who are very afraid that he'll do exactly what he says.
One of the first things Trump has promised is a robust deportation plan. And amidst those costs to the government and the economy, the Trump team is also planning to have the Republican Congress pass another round of tax cuts. Here's Bloomberg reporter Joshua Green.
You know, the first item on his agenda looks to be extending his 2017 tax cuts and maybe even cutting corporate taxes deeper than he did the first time around, which would be very exciting to his Wall Street contingent, to his billionaire contingent, but it could certainly help exacerbate inflation, as could a steep round of tariffs. So on the one hand, you know, you could satisfy one half of the coalition, but if the cost of that was for prices, inflation, and interest rates to rise again, then a lot of the same working class voters who supported him 2 weeks ago could potentially turn on him and Republicans in the midterm elections and hand power back to the Democrats.
But even before the political power swings back, tens of millions of Americans would suffer. During the Biden administration, unemployment stayed at historic lows. Wage growth outpaced inflation, and the stock market rose by 35%. Half of all Americans have money in the stock market, primarily their savings. If the market crashes because of high inflation or other economic problems, the people who need their savings sooner rather than later will face hardships they were not counting on. In the big picture, there's another Trump plan that is already starting to hurt American consumers. Trump's overall platform is projected to widen the federal deficit, adding to the government's borrowing costs. The Committee for Responsible Federal Budget estimates that Trump's fiscal policies would add an extra $7.75 trillion in government debt over the next 10 years. The prospect of so much additional debt has already spooked investors, causing bond yields to rise sharply. Mortgage rates, which tend to follow the yield on 10-year treasuries, are also beginning to climb. So even before Trump takes the oath of office, the rates Americans will be paying for mortgages, car loans, and credit cards are rising. Now, much of this may come as a surprise or shock to many Americans, and that's because most Americans do not follow or understand basic economics. Larry Summers spoke to that as well.
I don't think people are professional economists. I don't think people trace through the impacts of policies like deportations or tariffs for the inflation rate. We don't rely on people to figure out what kind of nuclear reactor is going to be safe, and we don't rely on people to do complex economic analysis. And look, there are no certainties. Economic forecasts always have errors in them. But I think there would be a very strong and very widespread view that if implemented, these policies are inflationary. Now, I think many people hope that these policies are being used as threats to get other countries to reduce their trade barriers, that they're being used to send signals with respect to immigration, and that it won't actually be these policies that will be implemented. We'll have to see. What I can say quite confidently as an economist is that if these policies are implemented, it will mean a substantial increase in the price level. And substantial increases in the price level, we've seen how people react to those.
And the reaction to the inflation we had 3 years ago caused most voters this year to say no thanks to more of the Biden-Harris leadership. So this stuff packs a political punch on top of the economic impact. Now, I've seen a lot of Democrats who understand the implications of the Trump plans and are saying that Trump voters who suffer in the next few years should not get an ounce of sympathy. I get it. For electing Trump, the chickens are going to come home to roost in America, socially, economically, and financially. And when things do get bad, many of us are going to tell our Trump-supporting relatives and neighbors, "We told you so, asshole." But keep in mind, there are things that all of us can do in advance to get ready for the catastrophes that are coming. For example, you can diversify your financial and savings portfolio. If you own a business, start buying up supplies now before the tariffs make things more costly. And make sure you have a plan for who you can turn to in case you need help both financially and emotionally. It's easier to get through tough times when you have a solid support group, including friends and family. So reach out to people now. Tell them you are hoping for the best but planning for the worst. And most importantly, be good to yourself. Trump 2.0 is going to be challenging enough, so stay strong. By the way, even Fox News is now raising concerns about Donald Trump and his preferred team.
When Susie Wiles took the job, you heard she says, one thing I'd said is, I don't want to see any the clown car. I always thought Matt Gaetz was in the clown car. So I'm surprised he'd be part of the starting lineup.
Check out that video at the link below. It generated a lot of comments on YouTube. One of the most popular is from Mr. Gruff, who writes, "Never voted for Trump, and I will have zero sympathy for those that did when the consequences of their vote come crashing down on them." I hear you. I look forward to reading your comments about the growing panic among investors and analysts who say Trump is going to trigger an economic catastrophe. I'm David Schuster. Thanks for joining us.